Welcome to the Greed Geek Podcast with your host, Jason Fern.
What is up, everybody? This is episode 2 of the Greed Geek Podcast. Today, we're going to hit up on a very popular topic, and that is, how do I get started in cryptocurrency? I'm going to start off by introducing my good buddy, Paul. Paul's back today.
Back again.
And our guest today is a good friend of mine who I've actually known for 25 years. We grew up together riding the bus, Max Stewart.
What's up?
Hey, Max. So first of all, why don't you start us off by telling a little about yourself, about your investment background, and how you got started in crypto.
Yeah, so I've been ever since college, I've been a Forex trader. So I was for a number of years, and I did a lot of stuff on some different platforms, played around with it for a number of years, was through the 2008 period. And then about 2013 or 14, you started hearing a little bit about Bitcoin and Satoshi and all the different things. And so about 2014 or so, 15, I got into a little bit of it, played around with it just like everybody else did. And then once it kind of did that first peak, I kind of really got interested when it hit like 3,000 the first time. And then it went to 17,000 in 2018. It was great. But yeah, I played around there then. So that's been my trading background. I've been doing it for a couple of years, but most of my time I spent in Forex and technical. But that's where I am right now. So
awesome. Well, the whole reason that I started this podcast is there's a lot of resources out there for the professional investor, and they talk really stuff that's like way over my head. Even though I've been investing for like a dozen years, we want to start this podcast off for the average investor, the Johnny Q investor, Susie Q investor out there, and also get into some entrepreneurship later down the line. But again, crypto is one of these things that everybody finds super mysterious, just grabbing a lot of headlines. So today we hope to kind of dissect how people can get started. So before we do, I do want to share a little bit about my personal misery. So I think one of the reasons I'm uniquely qualified perhaps to do this podcast is because thankfully I've made more right decisions than wrong decisions, but I've made an incredibly large number of wrong decisions in my investment career. And this one happens to be one of the worst. Okay, so this is me posting on Facebook in 2013, asking if I should trade in all my stocks and buy Bitcoin. To be fair, I was not being completely serious. I was not legitimately going to cash out my 401k and put all my stocks into Bitcoin. However, I was at that time seriously considering putting some money into Bitcoin. And just to put this into perspective, it was at about, so this is November 1st. I think when I actually posted this, I checked on the 13th, it was like $180 a Bitcoin, right? If I would have bought $10,000 worth of Bitcoin, if I would have bought $10,000 worth of Bitcoin at $180, I think I did the math the other day, and it would be worth like $2 million today. That would have been a very legitimate investment for myself at that time, just taking $10,000 out of my retirement and diversifying into Bitcoin. And I did not. In fact, I was so bitter over the years about my lack of jumping in then that I've only very, very recently opened my crypto position. So anyway, I'll start with that sad story and say, don't be like Jason. When is the right time to buy crypto? 8 years ago. When is the next best time? Today. Right?
exactly. Yeah.
Good. So the first thing that people want to get started in crypto always ask is, what is crypto and why should I invest in it? Now, somebody just invented this currency out of thin air. I was actually having the conversation with my dad last night over barbecue, like trying to explain, like, hey, the U.S. dollar was invented out of thin air too, right? But we decided it had value. Gold, why does that value? We decided it has value. But what would you say, Max, to like when somebody asks you that question?
So we talk about this all the time, right? Like right now, you were exactly right. Like the dollar is, we're essentially creating the dollar out of thin air all the time. Like every day they're putting more dollars into it. But what the problem with the dollar is, it's a transaction-based system. Like you have to have a dollar and it has to fluctuate. Well, with Bitcoin, it's all digital. So you just, you can pay for things over your phone. You can do wire transfers across the globe with Bitcoin, send them to different networks. I mean, I had to do a wire transfer for a project I was working on. It was like $65 each way to do a wire transfer. And then if it faults, through the bank, whereas at least with like Bitcoin, everything is processed and clear. So, a lot of people are looking to this as more as an international like currency method or as a way, to get it. It's still not money yet because money is still gold and silver, but it's getting to that point when you have more and more reliability on like Bitcoin and some of the cryptocurrencies. And the great thing is they're trustworthy. Like you have a lot of people that have to validate it before it goes into the system. So that's kind of the most interesting thing about it. You can fake a dollar. You can't fake a Bitcoin. It's in the system. It's a ledger, and everybody can see the ledger, and it's an open ledger. So that's kind of interesting about it.
Yeah, for sure. And I guess the other thing is, there's a limited supply as well, right? It's a fixed thing. Paul, does Lauren ever give you a hard time about investing in crypto, or how would you explain like why is this a thing?
Yeah, no, not really. She's not into the investment part. She leaves that up to me. But yeah, I mean, like you said, it's kind of like gold, but digital, and with Bitcoin, at least it's finite. It's going to get to a point where it's completely mined and the value is definitely going to go up at some point. Other currencies, Ethereum, different ones are different the way they work and they're not as finite, but Bitcoin is at least finite. And so far, very little fraud, like Max said, can happen. That people are worried about dual use Bitcoin. I guess there's been one or two cases where things have happened where someone's used the same Bitcoin or at least a fraction of it on two purchases. But for the most part, it's super, super secure. And I think people, especially right now, in March actually took a big chunk out of my stocks because I thought with all that's going on, the pandemic, the presidential election, that crypto might really take off. And I was wrong until about August. I took it out and put it in there, and then magically in August it just started going up. So it was a good swap at the time, even though the market has done great as well. But my crypto has increased well over 150% since March.
Yeah, one thing I have learned over the years, you can never figure out how to time the market. So don't bother to try. It's going to do the opposite that you think it's going to do. So people get over the fact that crypto was an invented thing, right? So the next thing that people want to know if they finally do accept it has value is how do I get started? And that's the next super overwhelming thing because there are so many ways that you can buy crypto. Like as a matter of fact, Max has educated me that I'm doing it wrong. And unfortunately, sorry, Paul, you're doing it wrong as well, because we have bought our crypto in a derivative market versus an actual market. So Max, break it down for us. What does that mean?
Yeah. So there's two things. This is what everybody has to kind of be, worried about, not worried about, but you have to understand, the way you hold cryptocurrency is in a digital wallet, right? You hold it it's got a string of characters on your wallet. You can actually see that wallet with the numbers in it and everything. Well, Robinhood and Webull and a couple other things, PayPal, have come up with this, buy cryptocurrency, trade it daily on the cryptocurrency, but you actually don't hold that cryptocurrency yourself. It's all a derivative market. So when you look on your Robinhood app, you can't send that cryptocurrency that you own to somebody else. You can only buy and sell it, which means it's a derivative. It's almost like an options trade, right? You're betting on it going long. You're borrowing one Bitcoin from Robinhood or however much you bought, and you're saying, I'm going to bet that this is going to go up or down, buy or sell it, however I want to do it. But you couldn't physically send it to somebody else. So you have to get a wallet. You have to go to Coinbase. You can go to Blockfi. You can go to anywhere where you actually get a digital wallet. And then you actually have the currency in your wallet where you can literally scan and buy and sell it from there.
Yeah, so that's the difference that I've seen is that I just signed up for Blockfi using Max's code so he gets a little money.
Good, yes, thank you.
and one of the things you notice is that you have this URL, this long address, which is kind of your unique key of how people can send it, and that's what allows you to kind of move it in and out, right?
Yeah, so you can trade it. You can scan the code. I mean, if I wanted to send some money to Jason right now for letting me be on the podcast, I mean, I can just literally, trade it and withdraw it and send it over to him using a wallet. And that's the great thing about it is it's literally, you can hold your phone up to somebody else, scan the QR code, and less than 10 minutes later, it's in your account.
Yep. And I use Coinbase for the past 4 years. The only thing I didn't like about Coinbase is the fees when you buy and sell. Yeah. You can't really day trade on Coinbase because you're going to get wrecked on fees. So, I mean, especially if you're doing high volume where I had $50,000, $60,000 in the account, if I sell 20,000 of Bitcoin and then buy 20,000 of Litecoin or Dogecoin, I'm getting dinged. You basically have to make 5% just to break even on the buy-sell option on Coinbase.
Yeah, so Coinbase to be clear to everybody is that is a good way to hold it. But one of the common ways that people are getting started, PayPal started allowing you to trade cryptos back in October, which is when I finally said, "Oh, I've got money in PayPal. I've got that set up. I'm going to start buying cryptos." And that's not one of those ways. But also, Webull and Robinhood, which is the way a lot of people are investing, is also one of those derivative markets where you don't actually have the wallet, you don't actually own it, you're borrowing it. So that's kind of what we want to try to avoid and what I need to correct in my own portfolio.
Yeah, I mean, you can definitely get it on there. That's not a problem. It's just the fact that you don't own it yourself. You couldn't walk physically to a store and go buy a pizza or anything. You could just say, "I have this on my phone," that type of thing. So that's what
and you also can't transfer it out, right? The only thing you can do is sell it and then go buy it somewhere else.
Sell it and go get the money and go do something else with it. Yep.
Yeah. So I also want to talk about, let's talk about some of the different apps. So some of the right ways to own it. We mentioned Coinbase, which is the most popular, that's been around, I don't know, one of the longest, right? So there's some other ones out there, Gemini and Blockfi, eToro. There's all these different ones. I don't know anybody's thoughts about some of those different options.
So, the biggest ones, obviously, some of the original ones in the stake were like Binance. There's Hit Bitcoin, there's Bitfinex, there's Bittrex, there's BitMEX. I mean, everybody's got a Bit whatever coin, account now. You've got, the big ones like Mount Goji in Japan that was there for a while, and they got really hammered because that was an investment scam. And there's a lot of stuff, wrong with that. But there's so many apps. You can just type in, Bitcoin wallet, and you're going to come up with 20 or 30 that you can go download, and they're all pretty cheap. Some of them have. There's a really good website that I found that has like all the different things. It's called Crypto Market Cap. It shows you all the different wallets and what they are, and that's a really good source just to see. And they got a comparison tools on there and all those things. You can just look them up. They're really easy to find.
Yeah, so I got crypto. Here's Crypto Market Cap here.
Yep.
Is this where you're referring to Coin Market Cap, or I pull up the wrong site?
Yep, same one. Yep, that's it.
So definitely do your research. But is there any of them that we should really try to stay away from, or any kind of gotchas for like going with a small player? One thing I've heard is that some people are tempted to do like the cheapest one, which isn't necessarily the best one, right? You need to do something more reputable.
So Paul, I'll take this, Paul. So real quick, just so you know, if you cannot transfer U.S. dollars, like you couldn't do a wire transfer or you couldn't do a bank payment into that thing, probably want to stick away from it because it's probably some Russian, crypto trader or somebody overseas, something doing that. So stick to one that accepts U.S. currency. And you're probably gonna have to put a little information in there to begin with, like what your name is. You probably have to put your contact information in there. That's important. I mean, you have it, but make sure it's a U.S. based one or one that's got a reputable background. I mean, Bittrex is U.S. based. Coinbase is U.S. based. I'm not sure. I think Blockfi is U.S. based too. They got people in the U.S. So there's a couple that really have U.S. bases that you can check out. Okay.
Paul, so are you going to stick with Coinbase, or are you going to looking at some other ones?
Yeah, I mean, like I said, I pulled all out of Coinbase when I thought it was going to dip again here about 2 months ago. When Bitcoin was like at 44, I sold out of Coinbase because I was sick of paying the fees because I was back into. I hadn't really day traded it or weekly traded it since 2017. The last time it went up, I just had some sitting in there, and I would use it, like you said, to transfer, to pay things. Almost like a Venmo to friends if I needed to pay something. And then when I put money back into it, Coinbase, in March when the pandemic was happening, it took off. I was like, all right, I'm sick of paying these fees. So right now I'm day trading a lot in Robinhood. But that's not my long-term play. That's just more because I don't want to pay the fees. And if it gets to the point where I'm done day trading it, I'll sell out of that and put it into a wallet. Again, just transfer the money right into a wallet. But I will have to sell on Robinhood and then just transfer the U.S. dollars into a wallet for the equal amount roughly. But, I mean, the one thing I do like about Robinhood is there's no fees, and I can trade Dogecoin 5 times in a day if I want on dips and ups and downs and not get a penny.
Yeah, we'll get to that one in a minute. So my next question is so we have these digital wallets, which are these services, but we also have physical wallets, which are also called, like the hot is the digital, and the cold is the physical. Tell us about that, Max.
Yeah, so I have a tracer, and I also have a ledger, and they're just basically what you do is you take them off the blockchain. Essentially, you're taking it and you're putting it in cold storage. You're not using it, and what you do for that is if that's really if you have like a larger amount. Let's say you have like 1 Bitcoin or more, and you really don't care about it. You just want to put it away for safekeeping. You don't want anybody to get to it. You just put it on a USB stick, which is essentially a crypto key stick, and it goes there, and that's where that wallet sits. Nobody can get to it. They can't access or trade it or anything like that. So if you don't want it on the market and you don't want anybody to see it, you put it on a cold storage, and it goes from there. So,
but we've heard about some horror stories about people losing millions and millions of dollars because at one time they bought it and they had thrown away or lost it or whatever, right? So yeah, that's a risk.
Read the directions on the ledger when you get it. Like, make sure you have a backup copy of your password and the key and everything like that. Because what's the one guy in San Francisco that is like sitting on $3.5 million worth of Bitcoin or $300 million worth of Bitcoin? And he's got one more attempt to go before his ledger will erase itself. So I'm like, that guy, I don't know what I want to do with that. So
I mean, that's a real risk, right? Or like, what if you lose or that thing, your house burns down or something like that? What happens?
Yeah, I mean, that's you're pretty much it. I mean, unless you have the key on a different setting, like you have your wallet listed somewhere else, you can get to it. But if you don't have that wallet key written down, you're in trouble. There are some metal versions out there, but that's like the next step. You don't want to get into that, but there are where you can keep it on a metal key, so you can just carry it around with you or put it in a safe deposit box.
So the record of the ledger, the record of these transactions that you own these stocks. Or it's not stocks, but Bitcoin or whatever is out there in the internet. Like you distribute it across the web, so it still exists. It's just a matter of you can't access it. Is that right?
Yeah, you got to find your key. You got to find your long string digit key, and you got to be able to get to it. I mean, if you can get to it, that's what you need to do. But if you can't get to it, you can't get to it. It's basically a USB stick with your key chain on it, and that's all it is. So it's not a really technical, really big thing. It just lists your keychain on there.
But if you want to trade with it, you want to do things with it, you've got to keep it hot in one of these exchanges, right?
Yeah, it's exactly right. So once you plug it into your computer, it's back hot again on the network, and you're trading in and out of it. So there are fees sometimes associated with that when you go in and out of the network too much. But definitely when you take it off the network, it just sits there. Nobody knows. I mean, you can see it, but it's not active. It's not moving.
So speaking about some of these hot storage options, there's a lot of them coming out now that are starting to pay you interest. If you do, my understanding is you would have to keep it hot, right, to earn that interest rate.
Yeah, so you're almost essentially like Blockfi, right? So Blockfi allows you put it into the system, and you're giving them access to it. So it's in your wallet, it's in your key, but they have access to use that money to trade and go up and down. And I think Blockfi was giving you on Bitcoin and Ethereum, like they're giving you 8% EPY per year. So that's a pretty good amount of money. It's better than
I think the Bitcoin was a little bit lower. I think it was like something like 6%.
Okay, yeah,
Bitcoin was 8.
6, yeah.
Yeah.
What's really cool about it is what's coming out next from Blockfi is they're actually going to give you a credit card. So everything that you charge on that credit card, you get 1.5% back in Bitcoin, which could be really interesting.
Yeah, it could be huge.
So like if you want to pay for a Super Bowl party, you can put it on there and you get maybe 1% back in Bitcoin.
So Blockfi is basically like a traditional bank. You can also take loans out through your resources. So it's kind of, crypto is kind of becoming legit, right? It's like it's a currency. So why can't you have a bank that you take loans out against and do all that and make interest on, right?
Yeah, right. I mean, now that it's way over $20,000 of Bitcoin, I mean, it's getting up there. It's starting to get more stable. It took a big run, but yeah, it's definitely a great opportunity for people that want to get into it.
Yeah, on Coinbase now as well, you can borrow up to I think 35% of what you have in Coinbase at like 1.5% interest. You know. So Coinbase is doing that where whatever you have, you can borrow it if you want and use it to reinvest or to go something else. Or again, just pay someone, put a down payment on a house, and you're getting, it's almost like a HELOC against your Bitcoin.
Yep, that's awesome. Yeah, and Gemini, another app came out with a program called Gemini Earn, which also I think the interest rates are a little bit less than Blockfi, but you can do some of the same things on that. So a lot of options out there. Again, this is becoming a legit asset. You can do a lot of things you can do with any other currency. Okay, so the next thing, did you have something, Max? Or?
No, good.
Okay, the next thing I wanted to talk about is because people get really confused because there are so many coins out there. Like everybody knows Bitcoin, but then after Bitcoin, there's a ton of other ones. So basically, it's like Bitcoin is by far number one. Then Ethereum is definitely number two. I think that's really uncontested, and those two have a little bit of differences, which I think we'll leave off maybe for this show. But just in the way that they're structured technically. But after Bitcoin and Ethereum, there's all these altcoins, and I think that can be an overwhelming thing. So what, Paul, what do you think as far as like how you distribute your holdings between the different coins?
Yeah, so mainly since 2017, I've stuck with Bitcoin, Ethereum, and then Litecoin. It was another decently big player or whatnot. But then in the hype of 2017, one of the worst purchases I made is there was so much hype. Bitcoin Cash came out.
Yep.
And I actually bought Bitcoin Cash at $4,000 a share, thinking it was going to skyrocket. And my dumbass still has those 4 shares of Bitcoin Cash, and they're worth $800 a piece. I'm holding on for the long haul.
I think it's about $450 a piece there, Paul.
No, I think they're like 800, right?
No, they're not.
I thought they went up. Again, they're sitting there somewhere. I got to look at my Coinbase because I still have those. Yeah, $888 a share for my Bitcoin Cash. Come on. But again, there was so much hype around it. I had made a ton of money on Bitcoin, Litecoin, Ethereum. So that was the next big one. And I mean, it literally, I was like trying to get bandwidth to buy it. Did it go through when I bought it? And like a day later, like, oh, it went through 4,000. And by the time it went through, it was already dropped to $1,500 a share,
Yeah, I think one of the things with these altcoins that come out is they usually have a huge pop when they're released. There's all this buzz and they go way up. Do not buy at that point, right? You gotta wait and see how they pan out over the long term, see if they're actually going to be anything significant. But I have the 1 year chart up here now. It's just so wild. If I zoom out further than a year, we see over the past year that Ethereum, is outperforming, 835% year, and Bitcoin's 318%. Litecoin 129 and Bitcoin Cash down there at 22% return. So yeah, if we look, so I'm looking at the current Bitcoin. So Bitcoin, one of the interesting things about crypto is it fluctuates so much. Like, so here's the 1 year on Bitcoin, and we just kind of came off a peak here. We almost peaked the other night, or last night actually, and then it's kind of coming back down. But we see this just for those of you who can't see this, it just skyrockets here in the past year. But we've also had peaks before where a third to a half of the value is lost. So you kind of have to have a strong stomach for this kind of stuff. What is your experience since you've been in a while, Max?
So I got in 2015 time frame, and then I really got into it kind of like 2016 or 17 when it hit like 3,000 a share, like 3,000 a piece. I was like, this is the best day ever. Yeah, this is great. And then all of a sudden it went to 17. I'm like, this is awesome. And then I held it and forgot about it, and it went down again. It like went below 3,000. I'm like, well, what happened? In less than a year, it went from 17 to back down to 3. So it definitely took a big wild ride. So, but once it started going up again a little bit, as a former Forex trader recovering now, like you look at the market value and you go, okay, this is what's happening. And then once it kind of got back into that like $7,000 or $8,000 range, I'm like, all right, back in the middle of, I guess it would be like the middle of May of last year. I'm like, all right, this is looking good. And then, so I bought a few into there, and then just held on to it because I haven't really had a sell indicator come up on any of the charts that I have. But yeah, it's definitely been a buy. Hasn't become a sell anytime soon. So
did you ever question whether you had done the right thing when it went from 17 down to 3?
Yeah, that was the biggest question, right? So you look at it and you go, oh, man, 17 to 3, that's a huge drop. And you're like, nothing does that, right? We have all of us have stock portfolios. Have you ever seen something drop by that much percentage gain ever? I mean, unless you're doing unless you try to bet on one of the vaccine stocks that messed up thing. But other than that, like that's one of the big draws is, people are like, oh, that's what people want to stay away from. I mean, is because they're like, well, it could drop. Do one of those drops again. So anyways, that's kind of the problem with it. But once it kind of started hovering in that 10 to 7 range, right in that area, I was like, okay. it might stay in that market, and we might stay there and go. And then sure enough, from there it went off. So
didn't even touch 4 again in the past year.
Yeah, so it hit 4. I think like the lowest we went to was somewhere in March of this year, with the stock market dropping as well. It was like 3.9, something like that. So 4, right around there.
Yeah.
So,
Paul,
still, huge.
How have you been able to kind of handle the fluctuations? Has it stressed you out at all?
Yeah, so again, I got in kind of before the pre-run. You know, I was buying Litecoin for $30, Ethereum for $100 in 2017, and I was literally on my phone for 3 weeks straight, just refreshing every 10 seconds and counting my money, you know. And then I would just make some, buy some, you know. And at one point, I bought, you know, I think Litecoin at $300 a share, and then obviously it tanked back down. I sold and made a ton of money before Bitcoin dropped, and left a few $1,000 in there, you know, my Bitcoin cash, stuff like that, and kind of switched back to the stock market for the most part, but watched it. Bought some OX, you know, about a year ago. Bought some blockchain because Barstool Sports, I follow it, and Dave Portnoy was talking about it. So there's different ones that I've bought over the last year, 18 months. But yeah, I mean, you got to be in it. Don't put money in it that you can't lose, I guess. It's the rush of like being at the craps table in Vegas. Like,
well, I mean, I guess it really depends on your strategy, right? Because, you know, it sounds like you're more of a trader where you're trying to kind of get in and get out at the right time, you know, take some money off the table. You know, where other strategies, like probably what mine is going to be just a buy and hold crypto trader, like, right?
Yeah, I mean, so if you're buying and holding, you're not buying the ones that are, you know, the more risky ones or whatnot. Yeah, I mean, and that's what I did. I held, and, you know, it was good holding on to, you know, 25% of what I had in 2017 because it took off back up. But, you know, if you have a stomach for it, I mean, you'll see drops every week, plus or minus 25% guaranteed.
Max, are you buy and hold day trader or a little bit of both?
So I buy and hold Bitcoin and Ethereum. Those are my buy and hold ones. I will admit I bought some Dogecoin because Elon Musk said so. So that's the reason you do it. But yeah, some of the other ones, like, so your main two, like Paul's right, your main two, Bitcoin and Ethereum. Hold those because those are contract-based ones. You know, Ethereum is, we don't want to get into proof of work versus proof of stake. That's a whole different chart. But definitely those two are your hold ones if you can buy those and you like those. But like the other coins are fun to play with. You know, what's the other one that just came out that just went completely crazy? Was it the Wall Street Bets coin? I think that was the other one that went nuts and everybody was buying that. So, yep, Wall Street Bets. It's a great little coin. But, you know, if you want to have something just to play around with, you know, obviously don't bet any money you can't afford to lose. But yeah, definitely store in Bitcoin and Ethereum because those are the most stable of the coins. And then all the other ones are fun to play around with if you like.
So I saw this Wall Street Bets coin, but then when I clicked on it, because I did this the other day, I was looking, I was like, what the heck is that? It says right in here, please note, this is a joke. No such asset actually exists. So is it a thing? I don't even know.
It's like a paper trade thing. People make fun of it. So like, oh, I bought 75,000, you know, whatever it is. So it's really not. And you can't buy them in the exchanges.
So, you know, people just getting started, stay the hell away from all these things, you know, unless you're just doing it a really, you know, specific bet. Like if you just get a rush out of the trading, you know what? Paul has made some money in Dogecoin, and more power to him. Because here's this meme stock that basically serves no purpose whatsoever. You know, Elon Musk all of a sudden talks about it, and this thing goes from being under a penny to now it's, you know, today it's hitting 7 cents again. You know, and who knows where it goes from here. But if you can get in and get out, then, you know, you can make some serious money even with these, you know, with these moves over the course of just a week. Paul, I don't know. You tell him. Are you still in, or did you cash out?
No, I'm still in, and we talked about this last week. Again, I found this because of Elon Musk, a sports board. It was under a penny a piece, so I bought $500 of it just for fun. And with all that went on with GME and everything, there was so much talk about stuff, and the Wall Street Bets mentioned it. So I like quadrupled my money. So I'm like, what the heck, you know? And I cashed out my 500, left in what I gained, and it kept going up. So then at like 2.5 cents, I'm like, all right, let's put $5,000 on this and see how it goes. And again, went off, up, doubled it, cashed out what I made, let it ride. And so I bought and sold some here and there. But a week ago, went down when we were on the podcast. It was, I think, at 3.5 cents a week ago. And I said, this is the week to buy it. It's going to go to 7 or 10 cents this week and then get out. And so I sold. I have 320,000 shares, and I sold 150,000 of them. And the other 200,000 of them are essentially house money plus. So I'm going to ride it out a little longer. I think if it hit a dime, I'd probably cash out half the shares and then just let the other half ride off into the sunset. Because it's one of those things you dream about. Like, this turns into the next Litecoin, gets to $100, and
I think better chance this is another GME. This is another GameStop thing.
I don't disagree. Again, and I'm house money, and so again, if it hits a dime, I'm cashing out half. I made tons of money doing that, but I'll let 100,000 shares sit for the long haul. And maybe
there are some people, if you go on these boards, plenty of people are talking about 10 cents, and 10 cents all of a sudden does seem pretty possible. But some of these people are talking about $1 a coin, which would be 100x for these people if that really happened. I don't know. We can't make, we're not necessarily making financial advice here, but it's risky to if nothing else, right? So, again, circling back to people who do want to get started in this thing, I think it's important to say, you can have some money on the side, some percentage that if you want to get into crypto and you just want to play and see what happens and maybe you get lucky. But, long-term buy and hold strategies, really you want to put most of your assets probably into Bitcoin, Ethereum. There's some other ones that are maybe out there that are getting some play. Cardano, I've heard quite a bit about. Polkadot. Litecoin has been around for a while. Chainlink is another one I've been hearing about. But I think probably, have some rules for yourself and say, I'm going to put, this much into Bitcoin, 40% Bitcoin, 40% Ethereum, and then maybe 20% you can spread out. Do you guys agree with that buy and hold kind of strategy?
Yeah, absolutely. Historically, I've been about 50% Bitcoin and 25% Ethereum and Litecoin, and then just a very minimal amount that I've played with the others. I do think Bitcoin's going to drop this week. Same with Ethereum and Litecoin a little bit. And I think at 35,000, it's going to be a great buy again. But I do think it's going to take a dip this week. It's just, nothing professional, just personal opinion, how I've seen it ebb and flow over the last year. And I think Ethereum's going to probably drop back down to 1,400 probably at some point. But I do think Ethereum by the end of the year, there's a decent chance that gets to $3,000 sometime this year.
Max, what do you say?
Same thing. Yeah, I'm about, of my overall investment portfolio, about 3% now in crypto, and of that, it's like 2 in Bitcoin, almost 1 in Ethereum, and then the rest is just play around for fun. I do have Dogecoin too, so yeah, we talked about that. That's fun, but that's kind of where I'm at too. It's you don't want to put all of it in there, but for now, it's good to start and play with it, and then every time you invest, every month you take that portion of your your check, you put it into your retirement, put a little bit into your Bitcoin every month. Some of these apps, they can do reoccurring payments, so you could set up a bank account to automatically put a little bit in there. So no matter what the price is, you're automatically buying a little in. So that's kind of I like that. I really like that aspect of it.
Yeah. I put $30 in a week automatically. Minimal amount that I've just been doing for 5 years, just $30 a week, just so I don't forget. Just $30 a week automatically goes in.
Yeah, and that's a great strategy, and that's a great investment strategy no matter what. So it's good to do. You could ride the wave on all the stocks in the world. If you would have bought a month ago, you would have bought Halliburton, or a year ago you would have bought Halliburton and a whole bunch of other stocks. They're now 3 times what they were beforehand. You just keep putting a little in every time. So.
Yeah, so I think no matter what you need to do, you need to be disciplined. You need to be, and this is not a crypto exclusive thing, right? You need to kind of understand what your appetite for risk is, and you need to make a strategy, and you need to stick with that strategy. And every once in a while, revisit your investments and do some rebalancing. So maybe that means taking some off or adding some to your crypto position, and then within your crypto position, rebalancing as well. You don't want to get overexposed to have too much Bitcoin, not enough Ethereum, whatever. Have those percentages, and then be disciplined about going in and kind of rebalance them every once in a while. I am absolutely of the mindset of I want to get into a scheduled thing. I'm so late to the game right now that I'm just trying to establish my position. A guy that I really admire a lot, and I don't know how to say his name, but Chamath, help me out, guy.
Chamath P. I think that's the best.
Yeah, Chamath P. Let's just say that. He's a former employee in Facebook. Anyway, billionaire. I really like his strategy. He recommends putting 1% of your portfolio into it. Max is doing it maybe closer to 3%, but have some sort of small percentage. We're not saying cash out all your stock, but have some sort of thing you're going to do. And if nothing else, it's a hedge. It's a hedge. Even if you take the investment rewards off the table, it's a hedge if like all hell breaks loose in the U.S. government, something massive happens. Like this is decentralized and could potentially save you in that situation. So do that. So me personally, I'm trying to establish my position to at least 1% of my retirement portfolio into crypto. And then from there, I'm going to set up automated payments where, I don't know if it's going to be weekly or monthly, but it's going to be some sort of schedule where I'm just putting in to kind of keep up with that. And then again, kind of going in and rebalancing every now and again. All right, y'all. Well, hope you enjoyed this episode. We'll be back some more. I think maybe crypto is probably going to be on the agenda in future episodes as well. We'll maybe dive a little bit deeper. Go out there and set up your accounts. Thanks, everybody. Thanks, guys, for joining me. Max, Paul.
Later, guys.
Thanks.